This is Robert Kraft, and I'm coming to you live on SNNLive, and we're here at the MicroCap Conference 2016 in Philadelphia, Pennsylvania. With me right now is David McPhail from MEMEX Inc., publicly traded company. I got two symbols for you. One is OEE on the TSX Venture, and then in the U.S. it's MENXF. David, welcome to SNNLive.
Thanks very much for having me, Robert.
It's great to have you on our program.
Thank you.
So for our audience, let's start off with an overview, and then we'll go from there.
Sure. So MEMEX is a symbol OEE on the Venture Exchange. We are an industrial Internet of Things company. We're both a hardware and a software company. And basically what we do is we measure manufacturing excellence, which creates a 300% on average internal return rate of capital for our customers.
So let's get into the product line a little bit. Actually, I want to start with the history of the company. How did the company start, and then end up where it is currently at today?
Okay. So, yeah, that's a good question. So I bought the company out of receivership in 2008. And myself and a group of investors put several $1 million into it to develop the technology, develop the market space, get a couple of marquee customers, publish some case studies. In 2013, we did an RTO, or reverse takeover, of a company in Canada, and we're publicly listed as of November 1st. So we've been almost 3 years now a publicly traded company in Canada. 37.1% of the stock still resides in insiders' hands, so it's a tightly held stock. That's pretty much it.
So let's get to the technology a little bit behind the company's product line and services. What is the company's competitive advantage over? Because industrial IoT, it's becoming a very interesting market.
Buzzword topic.
Yeah. So what is the company's competitive advantage over the competition?
Okay, so MEMEX is both a hardware and a software company. So we have a hardware layer that basically turns any legacy machine into a web server. And that's important because it's one thing to buy a relatively new piece of equipment with an electronic protocol like MT Connect or Fanic Focus or OPC. Usually that's then sits beside a bunch of legacy equipment. Some of it predates the internet. And so we need to have a hardware device to actually take that data and turn it into actionable data so that we can then take it, use it in our dashboard application, and then create the compelling internal return rate of capital that I mentioned earlier of approximately 300%.
And what's the name of the product? MERLIN, right?
That's right. MERLIN's an acronym we created that stands for Manufacturing Execution Real-Time Lean Information Network.
You guys like acronyms for sure, right?
Our industry is full of acronyms. Well, pretty much every part of our industry is full of acronyms. IIoT, Industrial Internet of Things.
MEMEX.
MEMEX. Yeah, MEMEX stands for Measuring Manufacturing Excellence. Yet another acronym.
So let's talk about the industry itself. What's the size of this market?
Accenture calls it 20 trillion. GE calls it 150 billion. The market that we see, just simply disconnected marketplace right now, is about 65 million machines. Most of them are at least 15 years old. 70+% are 15 years old. At an average of $5,000 a machine, it's a pretty healthy number. It's actually a multi-billion-dollar market that we're chasing.
So tell me how it works. I want to know about the when a company buys the machine and then puts it into their manufacturing facility. How does that process all work? And then also include, when you have your recurring model on the services side. How does that all work?
Sure. So we're a perpetual license model now, and the reason for that is that most companies, 9 out of 10 companies, don't have anything connected to their factory floor, and 9 out of 10 of those will not support a SaaS model for fear of internet security. So really, if we were just a SaaS model only, we'd be I'd give my sales guys a 1 out of 100 chance to hook a customer or customer acquisition. It's not a very good batting average, to use a baseball comparison. So we are a perpetual license model. We have about an 18% recurring revenue, which is a combination of software maintenance and hardware maintenance as well, but also services. A lot of our companies and customers like to use us as their system administrator to look after the system. So right now we're about an 18% recurring revenue, and we will move to a SaaS model when manufacturers agree that the deployment strategy is actually something they'll support.
And on the implementation side, when you have one of your sales guys in there, how do they determine how many machines the manufacturing facility needs? Like, is it based on how big the facilities are or how much inventory they have? How does that work?
Well, most manufacturing companies have a litany of manufacturing equipment. We don't specifically target any one vertical in manufacturing. We've done a lot of work in aerospace, a lot of work in automotive, food and beverage packaging as an example. They're all different assets, but we calculate overall equipment effectiveness, or OEE. So that metric is pretty much ubiquitous across any discrete manufacturing environment. And so basically how we price it is we price it by the number of assets we connect to the dashboard.
So I've also seen in a couple recent news releases some contract wins. Can you tell me about that? And also, what is the sales process as well? Is it a longer process?
Okay. Yeah, so we've had just after IMTS, which is the another acronym, by the way, International Manufacturing Technology Show, was in Chicago last month, about I think September 12th to 17th, if I'm correct. At post that show, we put another $500,000 of revenue into our backlog. Basically the sales process is such that it used to be a longer sales process, say 6 to 9 months. It's now actually measured in some cases weeks, but I would say the average is probably 3 months. So it's come down, quite a bit from where it used to be. It's a hot topic right now. A lot of manufacturers are trying to figure out how to monetize an IIoT strategy, and we have a very compelling value equation of 300% on average internal return rate. So it's a very good story, and it's easily articulated by our sales staff. Maybe we should talk about our go-to-market strategy for a minute.
I would love to know your go-to-market strategy. Can you please indulge me?
Sure. So we have direct sales force, both in Canada and the U.S., and then we have a partner channel. So, for example, some of our partners are MEMEX, the world's largest machine tool builder, Okuma, the world's second largest machine tool builder. Just those two companies alone have 700 sales reps that sell to our target customer. And so rather than us build a sales force of 700 people, let's leverage the sales force that these two great companies have already built. In addition to that, we were recently in July, we were named a partner with Cisco in a go-to-market strategy. They have 6,000 sales reps that are targeting manufacturing. So it would be very difficult and expensive and obviously long for a company like MEMEX to build a sales force of thousands of sales reps. Let's just leverage the people that already have the trusted advisor role with our target customer.
So what are some growth drivers then for your business?
Well, again, as I said, 9 out of 10 companies don't have anything connected on their factory floor. So it's really very much a greenfield opportunity. And most companies are trying to figure out how to monetize an IoT strategy or a connected manufacturing strategy. And we've been doing this for years. We've been doing this since 2008, which is long before Cisco coined the acronym.
And I know you said this a little bit at the beginning when it comes to the history of MEMEX, but what is your background? How did you get into manufacturing to start with?
Well, I've spent 27 plus years now. I'm going to date myself a little bit, but I've spent a lot of time in manufacturing. I've been a plant engineer. I've been a manufacturing engineer. I've been a serial entrepreneur since 1998. Haven't taken a paycheck from a company I haven't owned since 1998. This company, again, I told you I bought out of receivership in 2008 and funded it. That has basically played the role of venture capitalist with a group of other people. I'm still the largest shareholder, and took it public and we've raised about $8 million or so far, and we still have over half of that on our balance sheet.
So from what you can tell me, what are some of the goals and milestones for the company for the rest of 2016 going into 2017?
We want to conservatively grow our revenue 100% year over year. So 2016 we finish September 30th. That's our year end. We haven't reported our quarterly numbers yet. We're already into Q1 of 2017. So when we do report our quarterly numbers for 2016, I think a measure of success for this company would be simply doubling our revenue year over year. It's been my experience that trying to build a company beyond 100% growth is very difficult because you have to build sales in lockstep with customer deployment, as an example. So it's very difficult to not have the wheels fall off the bus if you try to grow more than 100% in a perpetual license model business like we are presently. I know some SaaS companies can grow quicker because they just turn on more servers, but in our case, for the meantime, I think it's 3 to 5 years before the manufacturers support a deployment model in a SaaS-based environment. So we just want to grow at 100% year over year. That would be a measure of success for us.
And where can our audience go and find more information about the company?
MEMEX OEE.com.
My name is Robert Kraft, and I'm coming to you live on SNNLive, and we're here at the MicroCap Conference 2016 in Philadelphia, Pennsylvania. With me again has been David McPhail from MEMEX Inc., 2 symbols, OEE on the TSX Venture, and in the U.S., it's MENXF. David, thank you so much.
Thanks very much for having me, Robert.